What's good, everybody? Welcome back to another breakdown video. In today's video, I'm going to be breaking down this EURCAD trade that we took not quite long ago. We're now looking at EURCAD from the 4-hour time frame. We notice that price has been maintaining this bearish structure, forming lower lows. Let me change the color of that to red. Red. Red, 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 red. Let's delete this. The price has been forming lower lows, lower highs, lower lows, lower highs, breaking structure after structure, maintaining that bearish structure as we know it. Price is in a downtrend, and price has been in this downtrend for a couple of days now, which obviously we are only to be looking for sells. I don't know why I actually entered that buy, this buy that we took here. I was looking at this strong bearish close after rejecting this level of support. We would have actually waited for a breakout, a retest before entering, but it happens. So this chart pattern here is a bearish pennant. It's a bearish pennant. This is it here. So we're supposed to wait for that break and retest. So what happened next? After price broke this level of support, we tested this level of resistance. Price broke structure to the downside, came back to retest, consolidated a little bit, formed this chart pattern here, formed a double top, then broke structure to the downside. On seeing that break of structure, we was expecting price to retest. Whenever price breaks a level of support or resistance, we wait for the retest. That was when, after seeing that price has started to pull back up for a retest, I drew my Fibonacci and waited for price to reject our golden zone. The price came into our golden zone, rejected. We executed somewhere here, then price just flooded all the way back up, all the way down. Before I could even take some profit and move stocks to break even, it just wicked back up. That was so quick. At this point, my stop loss was already at break even. Then I noticed what price was trying to do. Had to place my stop loss back to where it was originally. Price never broke above our golden zone, and price just flooded. Now price broke structure, retested. Our moving averages is still very, very bearish. I think on all time frame, yeah, red over blue. So this moving average here is the 50 smoothed moving average. This is 50 smoothed moving average, while the blue one is the 8 smoothed moving average. So the way I set my Fibonacci is like this. Let me draw it. This is where my Fibonacci looks like. And this here is the setting. You can pause the video and set yours like this. This is how I set my Fibonacci. And this here I call the golden zone. Is 0.5 and 0.618. These I want to see rejections on the golden zone. So this here is my TP1, TP2, TP3 if I'm following the Fibonacci levels for my TP, and the 0.764 a little bit above it. That's where I place my stop loss. So if you don't know, now you know. Whenever you want to use the Fibonacci, you should obviously understand market structure. If you are on a downtrend, price is forming lower lows and lower highs, you're going to wait for price to break structure to the downside, break this level of support. Then on seeing that price is started to retrace, that's when you pull your Fibonacci, draw from the swing high to where price exhausted and started to pull back up. That's when you now wait for price push all the way into the golden zone. See signs of rejections, and you notice that it's also aligning with the previous level of support. Probably you're looking for a doji candle or an engulfing candle. That's when you execute. When you execute, your stop loss will not be above 0.764. Then you aim for the next or most recent level of support. Your TP should be, the first TP should be somewhere here, the closest level of support. Then you can now target for the extension. Same thing with bullish trend. When price is forming higher highs and higher lows, you wait for price to break structure to the upside. Once price starts to retrace, you bring out your Fibonacci from the swing low to the swing high, from the swing low to the swing high. Wait for price to get into the golden zone. Make sure you see signs of rejection, your entry confirmation, either a doji, an engulfing candle, or a double bottom. Enter your TP1, then the Fibonacci extension. You notice it's also aligning with this level of resistance, broke structure to the upside. It's now a level of support. So that's the way I use my Fibonacci. There are other things I look at, but for now, let me just leave it here. Like there are other things like your trend line, like the trend line, you got other confluences. The trend line might be in a channel, see something like that. So there are a lot of things I look at before actually executing. There are other confirmations, but for now, let me just leave it there. You can say your Fibonacci like that. Now you know how I use my Fibonacci, my entry levels, my stop loss level, and my take profit levels. So that was what I saw. Break of that chart pattern, a retest, then price flooded down. As you can see, the Fibonacci extension, price got to TP3. As I said, TP1, TP2, TP3. But we closed at a 1 to 3 weeks to reward. Almost a 1 to 4. I didn't really have the note. 1 to 3 is okay. So this line here was all the way from past data. I saw a level here, previous level of resistance. Let me see if the 4 hour is clearer. hopefully the data will get all the way back. This way stopped talking. But that was what I saw on the, so let me check. Let me check this view for her. Probably has to complete. It's the same thing. Okay. So that's the reason why we took this trade. As you can see on the 15 minutes, we had a doji here. This was our first entry. That rejection we executed. We also had another rejection here. Could have added more positions, but price flooded all the way down to our TP. So thank you guys for watching. Hopefully you gained something from this video, and I'll see you guys in the next video.